Hey there and welcome to the channel. In today's video, we are going to be taking a look at 5 small cap companies, which I think are interesting. One of which I already have in my portfolio and the other 4 I have on my watch list. I've already made videos on this channel about 2 of those companies. I'll make sure to leave the links in the description. But those are the companies that I've done the most research on, and I would say I'm ready to pull the trigger. It's just a matter of the right price. The fourth company I've done some research on, but not in depth. And the fifth company is a company I just recently found on Twitter. So I only have pretty basic knowledge about that one. But for those of you who don't know, a small cap company is a company that has a market cap of about 250 million up to 2 billion. And a mid cap company would be 2 billion to 10 billion. And a large cap company 10 billion plus. But if you are like me and you're trying to find multi-baggers, it's probably a good idea to start with small cap companies, since they are more likely to have more growth in the future. Now, in the video, I'm going to give you a brief introduction on each of the 5 companies, and we will then end the video by comparing their financials. But before we get into it, I do want to ask you to smash the like button and subscribe to the channel if you haven't already. And also leave me a comment below if you are already invested in any of the companies that I mentioned in the video. The first company we're going to talk about is called Gravity, which is a South Korean gaming company. And the primary reason that I invested in Gravity was basically because they were really cheap and still are for that matter. It is a gaming company, so it has quite cyclical revenues, but their main IP is Ragnarök, which used to be really popular on PC, but the company has done a really good job, in my opinion, to shift their users to mobile, and the management team of the company has talked about diversifying into other games. But the company has a lot of cash on their balance sheet, so they should be able to use that cash to acquire other gaming companies or use it to develop new games. Now, the ownership structure of the company is a little bit weird, where they are 59% owned by a company called Gung Ho Online Entertainment, which is a Japanese gaming company. And all of the executives at Gravity actually work for Gung Ho as well. But one of the top executives at Gung Ho Online is actually the son of the Japanese billionaire Masayoshi Son. Next up is a company called OTC Market Group or OTC Markets, and I made an in-depth video about them on my channel, which you can check out in the description. But OTC is a high-quality company that generates about 85 or 90% of its revenue through subscription-based sales model, and it doesn't take a lot of money to run the company, so they are always flushed with cash. And the problem for OTC going forward is just going to be how they are going to allocate all the cash that the company is generating. OTC is not a high-growing company, which we'll see when we go over the financials, but they do have high-quality management. The CEO, Cromwell Coulson, owns over 30% of the company and is, in my opinion, one of the best capital allocators in the public markets. Next up is a company you've probably heard of before and is super popular on FinTwit, a Swedish serial acquirer called Teqnion. Now, Teqnion has been acquiring a lot of companies and is growing really fast. And they have, in my opinion, a high quality management team in the CEO, Johan Stine, and the CXO, Daniel Sang. Both of these guys have skin in the game, and if you watch their quarterly reports, which are on YouTube, you really get the feeling that these guys would be fun to hang around with, and they do show us in their financial performance that they are good capital allocators. Next up is an Australian company called Jumbo. Now, this is a company I haven't yet made a video about and I've had on my watch list for some time. But after going over the company's financials for this video, I'm probably going to be doing a deeper dive into the company, since they are, in my opinion, trading at a pretty good price at the moment. What I like about the company's mode is that they do have high barriers to entry, meaning that it's hard to start a new lottery company because of all the regulations. It's also a pretty consolidated industry, with the 2 biggest Australian lotteries estimated to have about 70% market share, and Jumbo has contracts with both of those, which are Tabcorp and Lottery West. Jumbo is also still founder-led, with the founder Mike Veverka having about 1% ownership in the company, which is something that we always like to see. We want to have our CEOs have skin in the game. Now, the last company on the list is a company that I've just recently discovered through Twitter called Cerillion, which is a software company and a provider of billing, charging, and customer management systems. Now, Cerillion is also founder-led, with the CEO and founder Lewis Hall having about 30% ownership in the company. But like I said, I only recently discovered this company and I've just gone through their financials, which seem pretty appealing. So I'm going to do some further digging before I make a video about the company. And the last thing I want to do in this video is to compare the financials for these five companies. And if we start off by looking at the market cap, we can see that OTC is the biggest company on the list with a market cap of 674 million, with Cerillion being the second largest at 601 million. Teqnion is the smallest at 417 million, but they also have the fastest free cash flow growth. And it doesn't matter if you look at the 1 year, the 3 year, or the 5 year free cash flow growth rate. Now, the company that I have in my portfolio, Gravity, probably has a higher free cash flow growth rate than 0%. We are just missing the latest numbers, but both OTC and Cerillion have a negative free cash flow growth rate for the last year, but still have pretty decent growth for the 3 and 5 years. Looking at the valuation of these companies, Cerillion is very highly valued at an enterprise value to free cash of 54, but Gravity is currently trading at a ridiculously low multiple of 2, which is the primary reason I bought into the company, to be honest. But OTC is getting closer to the price that I would want to buy the company at, and Jumbo is not looking that expensive either, so that's the primary reason I want to do some further digging into that company. The return on invested capital is pretty strong for all of the companies, except for maybe Teqnion, which only has 12%. But Teqnion has a pretty strong return on capital employed of 22%. Although the other companies all have plus 40% return on capital employed, which is super high. It is the same thing with return on equity, where Teqnion doesn't stand a chance against the rest of these companies. If we compare the gross margins, Cerillion has those juicy software margins, which Jumbo has as well, and both of those companies have had pretty stable margins. Now, Teqnion and OTC have pretty good gross margins, but Gravity has pretty low gross margins, although they've been growing at a decent clip for the last 5 years. It's the same thing with the operating margin for Gravity, which has been growing by 20% for the last 5 years. But Teqnion has the lowest operating margin of the five companies at only 10%, but has been pretty stable for the last 5 years. Now, Teqnion also has a pretty low free cash flow margin of only 7%, compared to, for example, Jumbo, that has a very high free cash flow margin of 38%, which has been stable, and the 5 year median for the company is 36%. Now, all of these companies have healthy balance sheets, since I don't invest in companies that have a lot of debt on their balance sheet. For example, Gravity has no debt, and both Jumbo and Cerillion have very low debt to equity. Teqnion is really the only company that has any amount of debt to speak of the five companies, but they use that for their acquisitions. And like we can see, their interest coverage is pretty low, but we would want to see that at 10 or higher. All of these companies, except for Teqnion, are flushed with cash, where Cerillion has 7 times cash to debt, and Jumbo has 13 times cash to debt. Teqnion still has a pretty decent amount of cash in relation to their debt at 0.59. We are, of course, comparing companies that have really different business models. So I'm not in any way trying to take down Teqnion. It's a company that I'm really interested in and would like to buy into if the price is right. And then we have the share buyback ratio to check if these companies have been diluting their shareholders. And none of these companies have been diluting their shareholders to any meaningful extent. Jumbo has some amount of dilution if you look at the 5 year share buyback ratio, but for the last 3 years they haven't really been diluting their shareholders. Now, the final thing I want to compare before ending this video is the revenue growth for these companies. And we can see that Cerillion has a pretty steady revenue growth of 19% for the last year and 23% for the last 3 years. Like we saw with the free cash flow growth, Teqnion is the fastest grower, but a company like Jumbo seems to be pretty stable, while companies like OTC and Gravity are more cyclical companies. But over the long run, they have a pretty decent growth in their revenue. But since Gravity is in the gaming industry, the revenues can be pretty cyclical and dependent on game releases. And it is similar for OTC, which gets more revenue when there's a raging bull market going on, because then you have more retail investors and more professionals trading in the smaller companies, especially in the penny stocks. But to summarize, all of these five companies are really high quality in my opinion. Now, since I'm already invested with Gravity, I'm pretty happy with that company. I am looking to get into OTC and Teqnion, like I mentioned earlier in the video. And the next company that I'll do a deep dive on will be Jumbo because I do think it is an exciting company trading at what I believe to be a fair price. And Cerillion is definitely an interesting company, but their valuation is kind of high for me. But when you have a company like Cerillion that possibly ticks all the boxes, it is good to use the time while it's trading at really high levels and go through all of the analysis that you need to go through and then be ready when the time comes and the market gives you an opportunity to buy into it at a fair price. But that's it for the video today. I do want to thank you for watching and I will catch you on the next one.